So the topic of the panel discussion is building trust and ensuring consumer protection in the digital personal lending, the role of technology and regulatory measures. Also, we'll be sharing a release report on FinTech India, a consumer-centric approach. Now, please join me in welcoming on stage the moderator of this session, Mr. Jaikrishnan G, partner, PwC. Now, please let me invite our speakers for the session, starting from Mr. Anil Pinapala, founder and CEO, Vivifi India Finance. Mr. Ranvir Singh, founder, CEO, and MD, Ring and KISSHT. Mr. Srikanth Bureddy, co-founder, Buddy Loan. And Mr. Abhishek Sharma, CEO, ZestMoney.
But yeah, for all the energy the MC had started the session with, I think we should also try keep it as loud as possible. Having said that, I think in the interest of time, we have been given about 40 minutes. In 40 minutes, we don't know how much can we cover, but we'll try deliver some key messages around how this space is evolving, particularly from a focus point of today's discussion, which is trust and customer protection. To set the context, let me sort of take a few examples of things that have gone wrong very recently. In Feb 2022, we all read news about leakages in KYC and a large digital lender, one of the role model many of us tried replicating, had issues all over the media with respect to how some of our celebrities started complaining, saying, look, I have not taken a loan, but I'm being, my credit history shows this. So that became one of the first such incident that everybody started worrying about how secure is my data and how is this whole process running even when it is all automated. And then very recently, last July, just a couple of months back, there was a news report about a student taking his own life, after having taken a loan at a very young age and then not being able to repay, etc. And then just this last month, one of the large peer-to-peer lender had reported that they were duped to the extent of about 10 CR by some fraudsters. Now, these are some of the select examples that we know there are many such instances that happen, some of them being reported, some of them not being reported. What all this does is it impacts the customer confidence and in a way, raises some important questions about how are we running this ecosystem where everything is digital? How much are we open? How much of transparency, how much of regulatory guidelines are actively playing in this field? In that context, let me perhaps go one by one with my panelists, and where my request to each of you would be, starting with Anil, what do you see in this space today happening? You can reflect on pre-post-COVID and then pre-post digital lending guidelines as well. Has there been a shift in terms of how customer looks at it from a sector standpoint on how much do they trust compared to the physical and other channels, the digital lending channels? Your perspective, please.
Thanks, Jay, for having me here, and thanks, GFF, for hosting this. This is a fantastic event. Very pertinent topic, and Jay has very adeptly taken out the 3 examples that we don't want everyone to focus on as an industry. But it is the truth that things like that have happened in the past, pre-COVID, have continuing to happen. But it's a part of a growing pains, teething problems, as I would say, of a very young industry that is solving the need that was left unaddressed by the traditional financial system within India. I'll kind of take a minute or two to walk through some of the evolution of the space itself. Pre-COVID, it was all almost a lot of players were there. And we saw the first set of challenges with some suicides in my home state of Telangana, which kind of brought into forefront a lot of the issues with respect to unregulated and unlicensed digital lending. There were a lot of players, especially who were outside India, that were playing, that had apps, that had a lot of downloads, having some questionable practices in collections, no proper disclosure to the customer about the costs of credit and so on. But luckily for us at Vivifi and the apps we operate, mainly our flagship app FlexPay, we were already a regulated entity at that time. And I kind of brought up on this perspective. RBI is watching us as a regulated entity, but they also acted as an umbrella, because when that challenge came in, we were fortunate enough that it didn't affect us as a company. So it was very important for us to kind of it made us realize how important being a regulated entity was. And post that, as the industry started to evolve and the digital lending guidelines came out, which kind of clarified who is a lender, which is a regulated entity, and the people who are providing services around it, who are all LSPs. And anyone who is going to engage in this space has to be a regulated entity themselves or be partnered with a regulated entity. And that clarified a lot. And that kind of brought a lot of structure and maturity into the industry. And but at the same time, there is a lot of awareness. You'll have to look at the customer base we have. Is a digital native customer base. A lot of us have a average age which is below 30 of our customers. And these customers are very adept to express their likes and dislikes. If they go to a restaurant, they'll take a picture and say, I love this cake I just had. At the same time, if they don't like the service, they will just say, I didn't like this. And the same holds true for their loan or a lending experience or anything else that they are doing it. And that's why when you look at our space, the reviews are kind of tell a story in themselves. And it is easy for people to post that. Unlike a traditional bank and NBFC where the grievance redressal mechanism itself is probably a little bit cumbersome to complain. But the digital lending guidelines also made it clear as to how to complain and how to disclose. And we really welcome that because there is a standardization of disclosures. The customers clearly know the costs now. And as an industry, we have come together. This is a forum, FCC is a forum. We are also, Ranvir and I are also a part of a organization called FAZE, which is focused on consumer empowerment. And we are actively taking a role to educate stakeholders, but more importantly, consumers. Because the challenge right now we are facing is still there are a lot of illegal or unlicensed apps without proper disclosures. And I see Srikanth from FAZE here, and she is kind of fighting a battle continuously with the platforms, trying to identify and weed these out. And it has been our request as an industry to see if there is a possibility to whitelist apps, because if that will enable the consumers to identify apps which are already properly regulated and have a good framework of guidance that they can interact with. And that's what will build trust. And everything else that we are hearing out right now is a bit of noise in my mind. Yeah. It will just get clarified out. But it is, as I said, some of which is growing pains, but others is, the industry is maturing, we are all getting better. And we are lucky to have a regulator who is forward-thinking and forward-looking that has provided a framework for the industry to build a sustainable growth path.
Oh, excellent. Anil has brought up an interesting topic, and I mean, there are many points, but one of the things that occurred to me as very interesting for the budding fintech entrepreneurs also to look at the regulator as a friend, and he used two words. Being an umbrella and a watchful supervisory authority. Umbrella basically shields you from all the harms that whereas the watching role helps you to steer in the right direction. So that's an interesting perspective. Ranvir, I would like, rather for the audience benefit, if you could dwell a little deeper into how technology and the innovation is playing a role in terms of this aspect that Anil has mentioned about. How is it enabling a customer to identify who is a legitimate lender that I'm dealing with? When you walk into a branch of a bank, you see the branch and you see the facade and you know the officials are there, etc. But unlike that, in a digital world, you just click a URL and then you are there. Then how is tech playing a part? And regulator, of course, has a view in terms of how to identify which is the right interface. What is the view on the tech and innovation?
Thanks for this question, and thanks once again for having me here, and thanks GFF for organizing such an eclectic event here. You realize you're raising a very, very important issue. I think one of the unstated and inescapable assumption in any financial transaction is there is a flow of information which can be used or which can be abused. My sense is this flow of information has become many, many fold higher with the advent of technology. And if you look at last few years particularly, when there has been a big, big turn and cusp as far as the Indian industry is concerned, I think technology has played a very pivotal role in creating a pervasive sense of trust, integrity, resilience, and so on and so forth. And I think this is something which has to be identified by everybody, regulator, customer, as participant in the market, everybody. How world has changed in last few years, pre-COVID, post-COVID. There is a sense of real-timeness in every transaction. Today, it's not about you and me. Even our maids and drivers, they show a degree of impatience when it comes to getting a transaction done. Yeah. Words like real-time transaction, real-time lending, real-time purchases didn't exist perhaps 5 years back. And I think the thing to recognize is that this whole real-timeness had added a very high degree of trust in the whole ecosystem. One should not be too swayed by, see the incident which you were narrating, which you're mentioning, they are very tragic, very, very this thing. But at one level, anybody who has done a rational, who has seen this in a far more rational manner, would realize that these are stray incidences, as against they define the norm. So technology has played a very pivotal role in that sense. But let me also warn, technology is a little bit like a double-edged sword. All the players that one was talking about, all the nefarious elements who have exploited the gullibilities or the sensibilities of the customer have also used technology. We know dark web is a citadel of shade and secrecy, which basically has gone into building this. So as much as technology has been a great enabler in bringing trust, it has also, it is similar to basically Frankenstein meeting his monster. Technology made it easy, but technology also allowed people to get into doing a few things. But I think the biggest benefit of technology, if I see from, it has curbed the practices of many conventional institutes who perhaps were taking this whole trust and consumer protection for granted. Not because of very intended reason, but because they never had the wherewithal to actually go and do things which can help or add a layer of trust in that. And I think the biggest thing technology has contributed, along with regulation by the way, because it has gone hand in hand, is it has actually created a free market, if you may, of saying, people like me and Anil, the reason we have a more sanguine view of the future is because we genuinely believe today trust and consumer protection is no longer a byword. It is no longer to be discussed in the confines of a big conference room to say, oh, now we have to pursue this. As we are thinking about new products, new processes, you cannot have any process exempt from, thinking about trust and consumer protection and ensuring the consumer data is taken to the last level. I think I will make one more point here, which is one of, as much as we are seeking trust, and this is where again technology has played a role, as much as a customer is seeking trust, this is not a one-way journey. If one wants to achieve trust among customers, it has to be two ways. Yeah. What I mean by that is even institutions should have data, should have flexibility, should have the right wherewithal to go and I think to go and basically analyze the customer, where they are not second guessing the data. And one of the good things which has happened again in the last perhaps 5 years more than in the last decade is government and regulator has come together to create infrastructure. I mean, why do you want PAN number if you can validate the PAN from NSDL? Why do you need Aadhaar number when you can validate through eKYC? Yeah. Bureau gives you enough and more, perhaps a great deal more in terms of analyzing the credit. So the point I'm trying to make is, it is this presence of appropriate infrastructure, which of course technology has kind of accelerated, has also played a role in building this two-way trust. There is no way this can be done with only one way. It is a two-way thing.
Yeah.
So yeah, some of these points.
No, I think, Anil, you rightly mentioned the digital public infrastructure, which has kind of enabled most of the creation of this proposition, is also facilitating the most effective part of how are we managing this and growing this. As we move forward to Srikanth, you being an LSP, I wanted to ask you a question about, obviously you can comment about the trust element as well, but just in terms of the customer protection side, which is also the theme of this panel, how is the current state of affairs looking at, especially considering that many of our customers who are taking digital loans are younger in terms of their demography. The over-indebtedness, by definition, is meant for people who are, repaying, and there is some repayment capacity which is measured in a different way. In your perspective, how is that point being handled? That is one thing I would like you to address, but you can also have your view shared on the trust.
Yes. Before I answer anything, I want to know, there is no one from RBI, right, here? And
you will get this recorded and delivered to RBI in any way. So.
Okay, great. So before I speak about this consumer, ये तो बहुत बड़ा चीज़ है, थोड़ा मैं बाद में बात करता हूँ. Before that, I want to talk something about digital. For me, the loan is an anxiety business. And why I say anxiety? Because my understanding of the loans, it has started from as a cause to a business. So 10 years back, I want to take a loan. I went to approach the bank, and I applied for a 5 lakh loan, and that bank rejected. So I got a call from the manager, boss, तुम्हारा loan approve नहीं हुआ, rejected. अभी reason पूछने गया तो he will take another 10 minutes. I love to know the reason, but whatever he is telling, it is like bounce हो रहा था मेरे को. So इधर भी मैं try कर रहा था समझने के लिए आप क्या बात कर रहा था सब लोग. But that's what that time also it was bouncing. So that time I just want to go and hit him, but उसका गलती कुछ नहीं है. But it's all anxiety which built. In the process, because then I realized, in last decade, I realized that there is a more of rejections in this industry than success. If 100 people are coming for loans to you, you reject 90 people and approve 10 people loan and you give the loan. And 90 people condition, you need to handle it. So what I look at it, how we can build this technology to handle those guys. And today, after this, I got this session and trust and consumer protection वगैरह मैं देख रहा था. I went to consumer complaints because someone complained about our company also. मैं तो लोन ही नहीं देता हूँ, भाई मेरे ऊपर क्यों complain किया? Because what we normally, once someone applied loan on our platform, we share those details with the RBI or NBFC approved lenders, and none of them given loan. And he coming and telling me, no, you are bad. So now how to these kind of things comes. So I look at digital, that digital is wherever the digital presence is there, you create a demand or you divert a demand. These two things happen. So I see in the loans, like Nirmala madam told just now, the 35% plus are now part of NBFC lending ecosystem, which is we're trying to take or creating a demand or taking a pie from the bank. One of the things which is happening. Now, when we do this, creating a demand in the lending space, we need to also create enough education to the people who are approaching through digital. That is one very, very important aspect. Like rightly he said, Ranvir, that in last 5-6 साल में इतना तप्पड़ मारा सबको, सारे companies को, अभी ये तो एक process हो गया. It is not a separate line. It's like when you're setting up a company, this become a process. And even for us also, we have a team, and the fraud level is different. Like 3-4 months back on our company and many other companies also part of it, someone used मेरा company का नाम का, they forged and used some other name and did a big fraud. Government आके हमको बोला आप fraud किया. भाई मैंने तो fraud नहीं किया, मैं कौन सा fraud किया था? So the big issue happened. It took at least more than 48 hours for us to resolve that issue. The fraud levels are different. And the latest fraud, just recent fraud, there is OTP. some fraudsters are using random mobile numbers and generating OTPs through the system. In a day, it is like 200, 300,000 OTPs which are generating. In latest, I am saying this. The fraud level, then the consumers are, the people are coming, no, I never generate OTP. Why Buddy Loan is telling that you received an OTP, enter these details. There's so many things are happening. Technology-wise, we need to kind of, we are enabling further how we can be more protective towards all these things.
Right.
So consumer also, we are trying to educate and give enough information for them. At the same time, we are trying to create more and more demand for this industry.
Right.
Thank you, sir.
Thank you, Srikanth. And Abhishek, as we come to you, one of the things that we've discussed earlier, saying that we would talk about at a concept level about trust and customer protection, but your role is also to make it a little more operational for our audience to say, what are the measures fintech typically takes? Because a lot of it is on us. Regulation is there as in terms of guidelines, which is more guidelines, so to say. There's no one who's going to literally come and handhold you to adhere to it. It is for us to adapt and then follow it. And there is obviously self-regulatory organizations phase, and we'll come back to that a little later. But from an organization standpoint, how do you internalize this? What are the steps that you take which will get integrated as part of your operations to make sure that you have the desired level of trust from the customer, and like Anil said, both sides, for you to have the trust on your customer, and also the measures that you can typically take on protecting your customer from getting into the wrong zones.
Thanks, Jay. Very pertinent discussion, right? And folks brought up very interesting items on how we should think about this. Maybe let me spend some time on jumping to how we at Zest think about trust, right? It is clearly important, it's very early stage of the industry, it's important that the orgs also take responsibility in building trust. And Ranvir mentioned exactly correctly, right? It's a two-way street. Given that we are at early stages, we have to take steps from our side, right? So when we think of trust at Zest, the way we think about this is in terms of this KISSHT framework. It's credibility multiplied by reliability, multiplied by intimacy, divided by self-orientation. It's important to note this is not additive. This is not credibility plus reliability plus intimacy divided by self-orientation. It's multiplicative division, right? So the starting point for building trust for orgs like us, and you brought a point that customer in this case is engaging with an app, right? And we face this day in, day out, right? A customer trying to buy an iPhone using ZestMoney at Coimbatore. When they saw this for the first time, they almost thought that this could be, I mean, how is it possible, right? So you have to kind of spend time building trust with that customer who's trying to get that iPhone from this Apple store back in Coimbatore, right? It starts with not having self-orientation. If you see, trust is opposite to self-orientation, right? When you engage with customer every single time, how do you demonstrate that you are not going to the customer with an agenda, right? You communicate that you are here for the customer, and you internalize this in the org, and it shows when you engage with them, right? In small things to big things, in product design to communication to CX and all of that. There's another softer aspect of this, which is intimacy, which is again warmth in the conversation and all of that, right? And there are two then hard rational items, credibility and reliability. Credibility, do you know what you're doing? If you are a digital lender, do you know you are an LSP? What are your roles and responsibilities? And for example, simple things. Our customers, most customers don't understand, so some of us are engineers, so we understand percentage, it comes naturally to us. But if you talk to common India, percentage is not a normal concept. Percentage is percent, per 100, right? It's not usual for everyone to understand. How do you communicate this in their language is super, super important. The other bit is reliability, which is what they see, is it what they see is what they get, right? If you told them EMI value is this, will it be that? If you told them processing fee is this, when did you tell them this in the process, right? All of that, it's super important. All this is multiplicative, which is important. So if you drop your credibility, trust in the system goes down. If you increase your self-orientation, trust in the system goes down, right? So you take balance all these four put together to make trust work for you, right? And there are a couple of things you do. One real example that we have kind of had from day one is, right, focus on, say, KYC. Now, there's always a debate, is KYC for you? Is it for the RE? Is it for the customer? Who is KYC benefiting? I think in the end, we all believe KYC benefits the customer, right? When we lend to a customer, it impacts the customer. So from day one, we've done KYC of the customer, right? It means, sometimes the product teams debate, it leads to drop-offs. So typically at KYC steps, we see about 30% drop-offs. Every new step in the customer journey is a drop-off. In the digital world, it's common to kind of remove friction and all of that. But some of this is good kind of friction, right? When you're thinking about customer trust in the long run, it's important to think about long-term. KYC is, say, one such example. Consent is the other one that recently came and all of that, right? So important to think long-term and think of all of these put together to then make trust happen. And it's our responsibility as being the forebearers of this digital lending ecosystem, right? There will be the next generation of startups that will come in 10 years out. They should be able to build on top of what we are building right now.
Yeah, absolutely. I think, an important point that is coming out is we have in the tech space, we have open source, and in the learning space, we have open journals. And in the fintech space, I think it's time we really think about open fintech, which is perhaps you can all keep, sharing whichever form. I think you mentioned about the face presence here, of course. Otherwise, also face is doing an active role in terms of as a self-regulatory, I wouldn't call, but coming to get there. So in your view, Anil, in that direction, start getting to share more within the community, because that's in our interest, common interest, so that we progress together. And also being self-regulated within the organization as well as within the community. What are the steps that are currently in place and how effective are these steps? What is that we need to do going forward?
So you brought up two separate aspects. I'll address them separately. The first one is the self-regulatory aspect, which is a stated objective of the digital lending guidelines and the rules that subsequently followed, is to enable a self-regulatory framework on the lines of what we have seen in the microfinance industry for the digital lending industry. And obviously, it's a time-taking process. And we, as part of industry associations, have published our own code of conduct. The rules are clear on disclosure norms, on aspects that have been touched upon, consent, KYC, and all of these are already there. And we, as an industry, are already following both the rules that have been promulgated by RBI, but also the practices that are better for us as a space. And that's the self-regulatory aspect. And at some point, a formal SRO will be formed. And regulation is always better when it's in the hands of the market players. Yeah. And the regulator is making the rules, but the implementation and compliance is ensured by the players because everyone is ensuring it's in the interest of the...
Absolutely.
So on the second aspect, which is about sharing, at an industry level, we are already doing it. We have tried to make a fraud database and others. But in India, our government and the digital public infrastructure has always taken a bigger lead, and they are already coming up with a framework called OCEN, right? The Open Credit Enablement Network, which is going to put together all the digital public infrastructure that's available today, be it your KYC, Aadhaar framework, your UPI framework, NSDL, all of that data, along with the account aggregator framework, which is on the Sahmati platform, where you will get access to the GST and tax data. And the credit bureaus will obviously be a part of it. That right now is being envisaged as an ecosystem that is mainly going to address access issues and bring financial inclusion for the MSME platform. But once the ecosystem is ready and it is functional, right now they're in the first cohort and in the developmental phase, I'm sure that the same principles can be extended. And it's always easier when it is done at that level, just as we have experienced with UPI, than something we are able to do within an industry association. And we have, not that we are not doing it, we are doing it and it is beneficial for us. But I am hopeful and would expect that OCEN kind of framework would become a standard, not just for MSME lending, but also will be something that the larger consumer lending industry can also leverage upon.
Sure. So extending the thought on digital public infrastructure, what is if you were to look at the wish list of, so KYC was there in the wish list for a long time because everyone had their own ways and doing it, and then finally now it is in a very uniform way that everyone does the same process. But in the wish list, the industry, from a digital public infrastructure standpoint, if this forum were to put forth 1, 2, 3, the next sort of sought after DPI, Ranvir, maybe you can comment on this. What would be those futuristic DPIs that we would like to see, perhaps as an extension of what we have today, or completely new DPI in place?
Yeah, no, thanks for asking this. See, I would say I don't think industry overall is looking for any mystical solutions. Whatever are under discussion, making it more pervasive, elevated to a level where it is getting used, I think would be a very, very big victory. It will make a world of difference. I think one of the things we have done, as Anil is pointing out, Srikanth is there as face, that we have elevated ourselves from petty competitism to get to some kind of a collaborative, competitive setup. What are we looking for here? The SRO framework, for example, it is there in papers, yet to be implemented, but there are all the things which are going in the right direction that it would get implemented. Something like this, I believe, will make a very big difference in just elevating the maturity level of all the relevant stakeholders who are participating in this. There are a host of issues which are linked to, account aggregator, the fraud, open network, etc., which needs to get to their culmination point. And I think that has to continue. I think there are two, three other points which have to be mentioned with respect to that. See, we all know that, RBI has, as a guardian of honest and fair play, they have shown very high degree of perhaps unshakable resolve in ensuring that the stability of the system is maintained. And as against they having a set of things that they need to implement, which of course is important from a long-term strategic standpoint, I think one good thing they have done is they have reacted to situations. They have not some discrete tinkering. They have gone out, looked at research rather scrupulously, and then come up with initiatives. But in the vein of what he said, if there is no RBI, I'll take the liberty of also saying that given the complexity of the issue, given the maze-like complexity, I think one runs the risk of over-prescribing and under-diagnosing.
Right.
Sometimes few issues can make things where the people who may be getting impacted because of some regulation would be a large populace. So having that right balance, putting a set of initiatives which have been agreed by the industry, I think being able to implement that in a time-bound manner, that itself will be a big victory as far as the industry is concerned.
Rightly said. I think, see, one is obviously there are measures that regulator is putting in, and all of you take as lead players in the industry, in your systems, integrating. But despite all this, things happen, right? Odd ones that happen. So they are not representative of the industry as a whole. For hundred thousands of transactions that goes through smoothly, and those demands that are fulfilled completely, there can be one odd incidents that are falling out. So I have spoken about some of them not as a representation of everything that happens in the industry, but just to say that these things happen. Now, my question to Srikanth is, let's say despite all our best efforts and measures that we have put in place, things go wrong. How do we react today with all tech and regulatory play and our own measures that are put in place? What is the reaction time? How do we come back to normalcy? And if you can take maybe an example, whichever way you want to articulate it, for the benefit of the audience, when things actually go wrong, how do we recover?
I mean, see, what is wrong? Wrong is in terms of, it's a two-way. You're talking about consumer perspective?
Consumer perspective.
So now, as I mentioned in my last one, that the consumers are adapting to the digital lending right now. Like, we lenders are not adapting to the consumer. Consumers are adapting. 12% interest they were used to be difficult. Today they are accepting 30% rate of interest also. So they are adapting to it. The way they are adapting to the, for their benefits, I think it's consumers' duty also to learn the challenges what they can face. The same anxiety of offline cannot show online. Yeah. That consumer, so for that, if we can build a proper technology towards it, that will help. Otherwise, the adaptation is happening very fast. Paisa kisku nahi chahiye, everyone need money. So in the process of that, the anxiety is also building across. And today money, earlier we need money for one or two things, but today money required for 25 things. So if you look at why you want money, some people say I need money for my dog's birthday, and someone else says something else, It's an dog का birthday के loan नहीं मिला तो anxiety build होगा, फिर consumer company ठाक डाल देगा, मेरे को loan नहीं मिला, ये waste company है. These all things will happen. So it's education, and also I want to suggest to all, even I also believe in very strong in that. We should not shy away, as like all lenders also, that what we are proposing to you. Like he mentioned, at what stage you are telling what we are going to charge. Instead of that, if you tell in the beginning, and no need to shy away. चलो 30% rate of interest पहले बोली दो 36% we charge rate of interest or 24%, and my processing fee is 500 or 600 rupees. Diwali offer 50%. वो सब बोली दो पहले. So it's get the person which more filtered, so it is easy. Yeah. That's what I
So
said.
being more open, transparent, and clear communication on this.
No need to shy away.
No need to shy away from this. I'll extend
Probably
the same-
just add to this, Jay, a little, right? Let's humanize this thing a little. Trust is a very human thing as well, right? If you go back to the equations, you have probably the most trust with your parents because you believe they have zero self-orientation. So it's kind of infinite trust, right? What happens typically in real life when there is a breach of trust? If you ask anyone, let's say there's a breach of trust in the family with friends, the next
divorce happens.
yes, that's always a risk. That's always a risk, right? If you went that far. But hopefully if you didn't go that far, then you apologize and you persevere and then you fix the system, right? So there are incidents that happen in the industry, right? There are mistakes that happen. Important bit is how fast did you correct them, that specific mistake, and did you set up a system to then not let it happen the next time, right? And you think about this. These two things matter, right? Yeah. It's like real life, right? There's a breach of trust with a friend. Did you, and you have to persevere a little more. So the moment you have a breach of trust in the system, then you have to repeatedly do stuff that then builds back trust. Right?
Absolutely, absolutely.
In industry.
Yeah, I think.
So probably go a little overboard.
Yeah, I was anyway going to ask you only this, but you've covered it half. But as a relatively new industry segment, the sense of accountability and being able to call out saying that these things went wrong, and so that there's a higher amount of trust after things have gone wrong when you've recovered. Usually when things can always go wrong, but when you start finding fault with the customer or not everyone else other than you, then things go further down south. But I think the sense of accountability and responsibility and being open and transparent about what went wrong, how you corrected, and that communication, what Srikanth talked about, are essential elements to regain the trust and only improve further upon there. That's as a newer industry, fintech should be able to adapt faster, coming out openly in terms of saying this is how it went wrong, this is how we corrected it, and whichever way, right?
Absolutely. It starts with probably saying sorry, right? In real life as well, when you have a breach of trust, you start with saying sorry, and then you fix it. It's the same thing with the orgs as well, right? The customer is credit is a beautiful word. I give you credit for something. Credit is a beautiful word. If you do it the right way, you can make a consumer's life really good, right? It's important to just humanize this and then act as if you're talking to and dealing with a human being, and it'll work.
Yeah, absolutely. I think very interesting perspectives. We have just 1 minute left, but I want to use the last 60 seconds, perhaps extend another 30 seconds. If anyone from audience want to ask any questions to our eminent panelists here, you can just raise your hands. Yeah, we'll go with the lady there. Can someone hand over mic to her? Just give a brief intro of yours and then ask the question, please.
Yeah, I'm Alka Murli. I'm representing the company called Yearbook Canvas. I have a question for Anil. In the first talk only, he mentioned about whitelisting of the companies who are into the business. So is that happening just now, or can that be? Actually, that is very important, because when you go on a new app or any new this thing, there is you are taking our KYC, but there is nothing that about the other company that we come to know about. So if that whitelisting is there or very registration is there, that can be displayed very prominently so that consumers also know that you are dealing with somebody who is very reliable or worthy.
Yeah. You want to take it?
Yeah. It's a request from the industry. RBI today has a list of registered NBFCs everybody who has a certificate of registration of NBFC, you can actually go onto the website and check the list of NBFCs. So we are hoping some similar framework will be available for the digital lending apps. But having said that, there is a very thorough registration process before any company is listed as an NBFC. So I can understand the regulator's dilemma in kind of ensuring that kind of authentication when apps can be very easily published on a platform, whichever app store, whether it's Google or Apple. So that's the challenge. As a consumer, as several people have said, it's a two-way street. We expect our consumers also to do their due diligence. Ensure, go to the website of the lender. They would have, if it's a legitimate digital lending app, they would have listed who is the lender. It's the RE themselves, or it's a partner bank or an RE. Go to the bank's website, go to the RE's website and check if this digital lending app is listed. So there is a lot of due diligence as a consumer that you can do that will help protect the consumer yourself. So yeah, we need to be vigilant in this way.
Yeah, I think just to add to that, as Anil said, the digital native customer today is not, it's not very difficult to do that. Having said that, as a proposal, sometime soon when the mechanisms are in place, we should see this coming too. There was another question, someone raised their hands. Please go ahead.
Hi, my name is Akshat. I represent India Lends. We are one of the largest marketplace for consumer loans, personal loans and credit cards. So it's more of a view and maybe a little fintech biased view because that is where I belong to, and happy to sort of get some reactions. I feel when it comes to some of these issues or anything else happening in the fintech ecosystem, it normally gets discussed with some bit of panic and a large concern, either from the regulator or various parts of the ecosystem.
Can you make your view faster? We are already short of time.
Sorry. So my limited view is, even today, if you see in 2022 alone, there were check-related alone frauds worth 150 crore. And less than that were frauds related to lending reported by the lenders. Today also there are, in the non-tech and traditional banking and other ecosystem, a lot of frauds that continue to happen. I feel there's these whole pieces with respect to gaps in KYC, etc. are a part of learning curve, and I feel as fintechs we are doing a much more robust job than addressing them while being a lot more vigilant than the traditional lending or banking ecosystem. That's my limit.
Heard. I think that's the right view, and we all second that view. Then, I know there are a few more hands, but unfortunately, the MC is giving me a look that I need to shut up now and then close this. So thank you all for joining. I'll hand it out to our MC to close this.
Well, thank you, sir. Can we please put our hands together for our moderator and esteemed speaker, everybody?